Welcome to Investors Insights, where the topic this week is Market Moment of Truth. We called it that because it is a huge week for the market. We've got corporate earnings. 118 companies out of the S&P 500 are reporting earnings, and then 13 of the Dow 30 companies are reporting earnings. So huge week for corporations reporting earnings. On Thursday, the GDP report comes out. We're expecting a 4% growth rate there. See what happens. And then also Federal Reserve meeting on Wednesday. So huge week, and hopefully we'll have some momentum will be created, because historically we're heading into a February that is usually pretty volatile. And so as you can see in this chart, the first February of a new president is historically volatile as the market tries to analyze new policies. So this last week of January, we really need to create momentum heading into February. But Trey, last week we talked about rising costs. I'd like for you to continue that discussion and how that's impacting the current markets.
Yeah, definitely, Bobby. And it's kind of a tale of looking at the fundamentals and how they may impact the market going forward. And like you talked about the FOMC meeting, you know, we spoke about all this buying online as putting strain on our transportation industry in this country, and we're seeing prices rise. Last week we talked about the trucking industry. This week I want to talk about the shipping industry. You know, most things in this country are imported. If it's imported, it's got to be on a boat at some point. And shipping prices of containers have gone up 128% this year. They've gone up 60% since early December. So we're really seeing that strain on the shipping industry of increased demand for goods that need to be imported because of the coronavirus. A lot of our production has slowed down. A lot of consumer spending on services has dropped, but consumption of goods and those goods being shipped instead of bought in stores, it's definitely putting a strain on our transportation index, and we're seeing those price moves. Now, it's estimated only 5% of retail costs are attributed to shipping. But if those 5%, if the cost of that doubles, then that does have an impact potentially on consumers and their bottom line and their wallets. We're also seeing that impact on potentially oil prices. So may see some hit on the consumer. What we're also going to need to watch as those earnings come in is do companies talk about that increased cost? Does that hit their bottom line? Are they passing that on to the consumer? In the FOMC, will we see Jerome Powell talk about inflation? The Fed has said that they will not overreact to inflation in the short term. A key phrase to watch is something maybe new to our financial markets vocabulary is transitory. Is the inflation transitory? That means that the inflation is only impacting the current year or current period and not viewed as something that is permanent. So, for example, when they reopen the economy, if we see airline prices shoot up for tickets because there's a huge amount of demand, is that a permanent change, or is that just reflecting the moment of reopening where individuals are more comfortable flying? If it's just one quarter, that's not terribly impactful on the economy. If it is a permanent increase in prices, then that's something that may hit for years to come and is more impactful. So transitory, a not often used term, but will become very important as we look at the fundamentals of the market when it comes to earnings, when it comes to prices. Are prices rising permanently, or are they rising just temporarily? And that would be transitory. So word of the day, maybe today, be transitory. But that's the focus that, you know, we're trying to shift back to fundamentals. I know Adam is definitely watching the technicals closely for sure.
Yeah, Adam, talk about technicals and also sentiment.
I appreciate it, Bobby. So going to technicals, as we discussed on Friday, we had a S&P close at 3,841. That pushes our new resistance level to 3,900 with a new support level of 3,770. Trey talked a little bit about consumer sentiment, and I also want to talk about that too, because with inflation rising like it is, it's important to look at, you know, along with the stimulus, will consumer spending boost even though we're having inflation issues? Also, the percentage of stocks trading above their 50-day moving average has been declining. That's a really important thing to look at. Even though it is declining, we still are trading above historical highs. So, you know, we're talking about momentum. Bobby talked a little bit about this from a domestic standpoint. I also want to point out that global momentum is changing as well. And an indication of this is in the China markets, specifically the Hang Seng Index. We're seeing a lot of momentum there.
Yeah, thanks, Adam. And again, the whole topic today is market momentum. And so everything we talked about today impacts momentum. We need momentum into what could be a volatile February. So thank you for watching. If you have any questions about all the topics we've discussed today, please don't hesitate to reach out to us via call or email. We look forward to hearing from you. Have a great week. We'll see you next week. Thanks.